do you take a view on events such as interest, timing of potential rate rises?
No, I mean, it's too hard. We might have an instinct about when we think it will happen, but we never make our investment decisions based on it, because what I found over time is that whenever you base an investment decision based on macro, you get it wrong. So just focus on the business. So for example, some of our bank investments, the reality is when interest rates do start to move up, that's actually going to be positive for them because they can grow their earnings a lot easier. They've got a lot of spare liquidity earning very little interest rates. They can convert cash to loans. They get more fee income. And in fact, what you saw on Friday night with the employment numbers, even though the market was down, the domestic bank stocks were up because it was a sign that we're getting closer to the fact that interest rates are going to start moving up on a permanent basis. So, when we look at the stocks, it's more a question of what's the market assuming. If there's no allowance in there for higher rates, and that's going to be beneficial to earnings, then it just supports the valuation even further. So that's more the way we kind of look at those sort of macro events playing out. But trying to pick when it's going to happen, I mean, look at the bond market. People have been calling for US rates to be going up for the last 2 or 3 years. You just get it wrong. I mean, eventually it's going to happen, but you'd be pretty frustrated if you had placed any bets based on trying to predict high US interest rates.